Okay, everybody, here we go. Happy birthday, Perry. I just see it's your birthday. 38 years old, dude. You are not getting old. You're like a kid. I got 20 years on you, but happy birthday to you, honestly. All right, people, this is my post-market wrap-up. It's just beautiful. It's freaking lovely. I'm laughing. It's beautiful. Wednesday, July 12th, 2026. Perry's birthday again. Thank you, everybody, including Perry, for being here. Magic Mika, Tunes and More, Lava Girl, Jerome Powell, Matt, everyone is here. Where's Lord Humongous? People, so we have again a lot to talk about here. Let's start off with the 10-year yield. Look, yes, I beat the debt market to death because it's the driver of every freaking thing. The entire stock market derives value from what's happening in the debt market. Why do you think, why does anybody think who doesn't understand this, that central banks, none more so than the Fed, have chosen to artificially suppress rates since the last meltdown? What does it do? You know what it does? Suppress rates, opens up a doorway. Cash makes its way into risk assets, reinflating a stock market bubble, real estate hyper bubble, creating all kinds of distortions across the spectrum of asset classes. Thanks, Mitch. Malinvestment, meaning cash coming out of things or going out of things you should be going into, and vice versa. Just over the last 4 days, we have watched the U.S. 10-year yield go from almost 4.09, 4.089 to 3.86. And today, the US dollar hit, on a relative strength basis, hit a 1-year low. This mechanism, suppress rates, weaker dollar, the stock market, I mean, it sprays its shorts all over the place, just like that. And maybe more like, yeah, more like that. And we've been watching this phenomenon. Do you realize that the MMRI dropped 20 points in 4 days? We were just at 260. Now we're at about 240. Can someone check that for me? Whatever the MMRI is right now. It's a pretty beautiful thing to see. On it's 241. Thanks, Lava Girl. 241. An epic move. And what this is? Do you realize? Look, all of you, I love you. You're so freaking smart. You're so far ahead of the curve. It's freaking insane. But again, we watched the phenomenon occur. We watched the MMRI cross 250. What happened? Stock started to sell off. We watch it rise to 260. Pressure on the market on stocks. Soon as it started to come down, market started going back up again, and it's a beautiful phenomenon. As a matter of fact, I'm surprised today earlier, the Dow Jones Industrial Average was higher by 300. We finished higher across the board. The Dow put on a gain of about 86. The Nasdaq here, the biggest winner. But the real story here again is the debt market. All right. Not only did the 10-year yield, along with the dollar on a relative strength basis, like literally fall through the freaking floor, but the entire yield curve came down, still the most inverted that we've ever had in the history of the world. Oh, we got some other interesting news right from the Federal Reserve, their beige book, their measure of economic activity. Maybe we'll just throw this out here. Please look this up for yourself. All right. Don't take Greg Mannarino's word for a damn thing. All right. But according to the Federal Reserve's beige book, they're admitting that the U.S. economy is slowing faster than they expected. No one saw this one coming. No, the Fed had no idea that by raising rates, it was going to kill the consumer, who is absolutely maxed out. We got some more news on that today, which we'll cover in a second here. The economy is grinding to a halt. But again, where's the crash? Greg.com? Duh! You deserve it. Duh! Indy, thank you. The market is not going to crash, as you all know, until this rate suppression cycle ends. Cash will continue to flood into the stock market. Most of you know I've been long this market for years, net long for years. Yes, I've taken up a few short positions here and there. It didn't play out too well for me as of late, as you know that, but net long for years. I am not a crash caller. The crash in the economy is in our freaking face. All right, .com, or should I call you .com? Uh, yeah, exactly. No, the Fed is not clueless, Wally. The Fed is doing exactly what it has set out to do: destroy the economy, crush the consumer, and continue to inflate. This is all by design. We are living in a side effect which has been planned and laid out by central bankers from 100 plus years ago. They are pushing the world economy in the direction they want it to go in. There, as a matter of fact, today there is no more institution more in control of what is going on than central banks collectively, who run the entire world. How do we know they run the entire world? Maybe you could, enlighten Greg Mannarino, the com. Let's see. Uh, who runs the economy? Well, it ain't Bidenomics, because that's not working out too well. It's obviously the central banks. Who runs the world markets? Obviously the central banks. Who runs the entire financial system and therefore controls the world? Controls the flow of money, cash, the flow of information. Yes, it's the Federal Reserve and central banks collectively across the freaking board. All right. Everything else is just, well, it's just nothing. All right. The Bidens and the Trumps and whoever, it's all just a sideshow. It's a freak show on an unprecedented scale. So, anyway, how many of you, here's the first question of this particular lovely live stream. Are you surprised? Being that you follow this blog, most of you here have been with me a long time, and because of that, you've been, we're well ahead of the curve. How many of you are surprised that, again, look this up for yourself? Federal Reserve Beige Book, their measure of economic activity, they're admitting the economy is slowing, and slowing more so than they expected. But not you and I, because that's the goal. The goal here is to crush the economy and crush it faster. Look, the boiling frog syndrome, people are just, that's it. It's just over. And people have been lulled into some sense of dumbed down phase, whatever they're in, la la land. But they're all going to wake up. They're all going to wake up. But the stock market is going to continue to go higher until when? You all know the answer to this: until the debt market meltdown happens. Everyone was asking me, hey, Greg, when are you closing your JEPI position? When are you closing JEPI? I'm not closing it. I told all of you, again, when I see the debt market really start to sell off in an uncontrolled fashion, that is when the real meltdown is going to occur. Until that point, forget about watching the market, calm, because there's no crash. It ain't going to happen as long as rates stay suppressed. But inflation is going to get higher and higher. Thanks, Mitch. Earlier today, just like an hour ago, I put out a newsletter. Please, if you have not as of yet subscribed to my newsletter, you're missing out on all kinds of things. All right. There is a link in the description of this video. I covered yet again, which seems to be something that is eluding a lot of people here. Again, the phenomenon of the markets is very in our face here. Suppressed rates since the last meltdown, '08, has caused, again, a super bubble in the stock market to develop, and a hyper bubble in real estate as well. Distortions across everything. You know that already. And it doesn't seem like it's done, especially this is an election cycle. The market will get propped up, and our illustrious thing sitting behind the Resolute desk is going to tout it. Say, look at the stock market. The stock market is higher and higher and higher. So our economy must be strong. Does that sound familiar to you? Yeah, it should. But again, it's all just a mechanism. It's a distraction. It's a deception. Inflation continues to rise. They're trying to convince us that the pace is slowing. But, honestly, understanding, let's just, put a couple of things out here. Understand that the consumer is done. All right. Household debt, personal debt, consumer debt, credit card debt, maxed out. Loan defaults across the board are rising. The banks, they're in a lot of trouble. And you've known this for a year ago. But the big banks here, they have losses on their books that they haven't seen and are really even have become realized yet since the so-called Great Recession. All right. And this is going to rear its ugly head soon as well, along with the whole commercial real estate thing. That is something else that's going to come out soon perfectly. You're right, EST. It is a selection here with regard to the election. No doubt about it. Anyway, yeah, where is old man Perry? He's not here today? Come on, man. Exactly. The consumer has been played like a grand piano. You remember what happened several months ago? They were offering people, the credit card issuing companies offering people huge increases in their credit line without even asking for it. They understood that people would go out there and swipe and swipe and swipe, max themselves out yet again. People are very irresponsible. They don't know how to control themselves. It's a fix. It's like a drug. Every time they swipe, they spray, swipe, spray, swipe, spray some more. You understand? I think you'll know what I'm talking about here. It's a phenomenon that just doesn't stop. And again, the U.S. economy, as we all know, is 70% dependent on consumer spending. Now, the consumers are done. It doesn't mean that the stock market isn't going to go higher. Again, this phenomenon, look, they shut down the global economy. How many of you recall when this guy, and I got myself into a lot of trouble with this, said get long COVID, meaning that the market would go higher while they shut down the global economy? Remember that? People told me that I was out of my mind. Greg, you don't know what you're talking about. How can the stock market go higher if they shut down the economy? There's no connection here. None. Absolute zero between the economy, which continues to free fall. Don't take my word for it. Look at the Fed's beige book. Look at the Federal Reserve's own admission here. All right. Market, economy, until they're done. Until this interest rate bond yield suppression cycle ends, and I don't see an end anytime soon. All right. The market will go higher. And this is why I will remain net long this market for the foreseeable future. For the foreseeable freaking future, period. Commodities, again, are the place to be. All right. Silver today, a stunning nearly 5% higher today. Gold put on a really nice gain. Crude oil continues to rise, people. Mark my words. I mean, like I said, if I'm wrong, I'll eat it. But I can't imagine a scenario that's going to unfold that is not going to push crude oil to 80 or above. That's where we're going. Commodities, freaking commodities. And when this whole thing really melts down, let's outline this real quick for the newer people. All right. Debt market meltdown is eventually going to happen at a time of their choosing. You understand? They're going to keep, the Fed's going to keep buying the debt, buying the debt. And where does all this cash come from? Where does the Federal Reserve get the cash to keep rates suppressed? It's not just laying around somewhere. They got to add it to a digital screen. You know how we always talk about how the Fed has two balance sheets, the public balance sheet, and then the other one that no one's allowed to see. Nobody at all, not even the freaking president of the United States, whoever it may be. No, nobody is privy to that. But they have two balance sheets. All that stuff is off balance sheet because the Fed can do whatever it wants. It's an organization that can just literally do anything. Okay. Their product is debt. The more debt they create, the more they buy. It's a revolving door. They issue debt through one door, they buy it back through another. Issue debt through one door, buy it back through another. This process, okay, is massively inflationary. How many of you believe that more than maybe 1% of our so-called loving, caring politicians know how the monetary system works? Maybe they do, but they're playing the game. They're all playing the game. Fund this war, fund this thing, fund this, that, and the other thing, whatever it's got to be. It's crazy. This is the most bizarre, twisted thing in the history of the freaking world. Anyway, the MMRI cratering, 10-year yield. I mean, wow. You and I, we were speaking about this a lot, saying how many of you believe that we were going to see the 10-year yield drop below 250? Most of you said yes. Some people said no. We are now like at 240. All right. We're now out of the so-called danger zone, which has proven yet again to be true. 250. 250. All right. That's it. They don't want the 10-year yield or the dollar strength to push the MMRI higher than 250. We got above 250. What happened? The market starts selling off. There were so many freaking detractors to the MMRI because they don't understand it. This is a real-time indicator. And I personally believe it's the best one that you're ever going to find. And it's free. The best things in life are free. Yeah, it's free. Check the link down here below to my website. Henry I. Fleoner, PA. Thank you. 100-ounce silver stack. That's fantastic. Yes. Continue to bet against the debt. Become your own central bank. So anyway, consumer spending maxed out. Economy slowing dramatically. I mean, clearly this is by design. This is what's going on here. If the Fed really, you have to understand what's going on. All this talk today about inflation is slowing, inflation is slowing. It's still rising. The pace is slowing. This is what they want us to believe. But a lot of this is because the consumer is getting destroyed. They're killing the consumer by design. Do you remember what two Fed presidents? I don't remember who they were. Maybe one was Lex Luthor. Talking about Neil Cash and Carey, and maybe the other one was Mary Dolly, the other thing who dwells. Lord humongous. Hey, dude. They said in order for inflation to come down, people need to lose their jobs. I blew my stack off. Some of you must have been with me when I blew my freaking stack off. I said, how about we start with these freaks? Why do they get to keep their jobs when they say that you need to lose your job in order for inflation to go down? Thank you, Tyler. It's crazy. Do you realize what's happening? I know you do. If you follow this blog, man, I'm freaking sweating. Geo Rider 92, you were there. I bet you were. Stack and spray. Oh, that's funny. That's funny, man. I tell you. Anyway, what else can we speak about here, people? I don't know. It's just so freaking twisted, this whole freaking thing. But again, nobody. What I love, you know what I love? I'm gonna tell you what I love. What I love is whenever you or myself, and we see a freaking headline, we see what's going on. 9 times out of 10, maybe more so, like 99 times out of 100, you expected it. You knew it was going to happen. You and I are so crystal clear on who the enemy is, and that is central banks, and what they are trying to do. This is an extermination on a grand scale like we've never seen before. They want to control inflation. What could they do? They could cause the institutions to raise their capital reserve requirements above zero. We have a zero capital reserve requirement by the institutions here. Think about that. It's crazy. But what else would you expect in this kind of an environment? You think it's going to get any better anytime soon? No. What you will see is more distortions. Again, as long as rates stay suppressed. Again, they're raising rates. Let's think about this. They're raising rates, but yields are dropping. Wow. Well, what that is actually doing, obviously, is raising mortgage rates to the highest levels that we've seen in quite a long time here. Borrowing rates across the board going higher and higher and higher, but bond yields are dropping. What a concept. What a phenomenon. But you see, here's something else. Oh, thank you. Happy birthday to me. Yes, it is my birthday on the 22nd. Can you believe I'm going to be 50 freaking 8? You know, age is a number. I really believe that. I don't feel 58. I'm still doing burnouts with my hot rods. I'm building cars here. And anyway, that's it, people. What else can I say? Oh, I do have a huge announcement. Are you ready for this huge announcement? And I mean, it's a big one. This Friday morning is going to be, and I want you to start spreading this around because people are going to go crazy. All right. This Friday morning is the last video or post or anything I'm going to be doing for at least a week. I am moving. I am leaving this lovely dwelling here. Thanks, Mitch. I am leaving this place, and I am inbound to Florida. Yes, I am driving, towing a whole bunch of stuff behind me. Maybe I'll pass by your particular state. Let's see. I was driving Arizona, New Mexico, Texas. What comes after that? I don't know. Alabama, maybe, and then maybe Florida right after that. So I'll be driving through over there. Maybe I'll see some of you and I'll wave on the way. So again, avoid Louisiana. I will try to do that. Why am I avoiding Louisiana? Please enlighten me. Anyway, Oklahoma, somewhere I'm driving through. I won't be driving to Sydney, Australia, although I would love to. One day I want to visit there. Some of my best friends are Australian. Honestly, The Seekers, one of my favorite bands from the old days here. Great stuff, The Seekers, yeah. Key West is awesome. Anyway, that's pretty much where we stand, people. We covered everything. And again, it's kind of, I love how none of it really is a surprise to anyone who follows this blog. I really believe this, and maybe, I'm partial or whatever, but all of you here are the smartest people I think that you're ever going to find anywhere. You know what's going on. You know what you're doing. You know why you're doing it. You are people of action. You are people of action. And That is just so important. You're not just sitting back here twiddling your thumbs or whatever. You understand the situation and you're doing something about it. Um, period. And I love that. So anyway, just again, keep in mind, I'll tell you next couple of days, but Friday morning, my last video for at least a week till I get situated. I'm gonna miss all of you. I mean that. I'm gonna miss every single freaking one of you. I need this. This thing, especially the live stream, keeps me somewhat normal. You all know that I'm definitely a little out there, but that's the whole damn thing. All right, we're gonna call it right now, and I will see all of you in the morning. We'll have a lot. Siesta Key is gorgeous. Been there, fantastic. Geo Rider. You know what? Just take what I need you guys and girls to do while I'm not here is converse with each other. Again, you're going to have the chat room on my website, for which I opened up some new spots for all of you. You got my newsletter. Please subscribe to my newsletter. You know, anyone that subscribes can post. You know, talk to each other. Yeah, Team Mannarino. Exactly. Lord Humongous. Okay. I'm going to put you in charge. Everybody, I love all of you. I love everybody. But Lord Humongous is in charge while I'm away. He is going to make sure all of you are taken care of and conversing. Okay. I got to meet some of you people here one day. I really do. Maybe when I get to Florida, when I get settled in, I had to rent an Airbnb. What's happening here, I bought a house out there, but it was like a blank piece of land. I'm having it built. I sold this house within an hour. Obviously, I priced the damn thing too low, but that's a whole other story. And so I got to get out of here because the people that bought it, they want to move in. They want me to freak out. Can't blame them for that, right? So I had to rent an Airbnb. Actually, the Airbnb is in Sarasota, so I'll be spending some time over there while my house is being built, and I'll be doing my blog from the Airbnb over there. It's like 15 minutes from Lido Beach. Oh, gorgeous. Another place I really love so much. So Lord Humongous is going to take care of everybody, and Magic Mika and Perry and Scott and Lava Girl. You're all going to take care of each other while I'm away. But again, that's on Friday. We'll talk before that. People, thank you. Thank all of you for those thumbs up. I really do appreciate it. We got 1,200 people. We got 553 thumbs up. Maybe we could do a little better on that. I really appreciate it. Share the video. Comment on the things that we have spoken about here. Honestly, and like I said, just stick to our game plan. You know what our game plan is? You might say stacking gold and silver and betting against the debt, but our real game plan is to love each other, to care about each other, and be charitable to each other, to have each other's backs. Everything else will fall into place if we have that, and I know we do. All right. I'll see all of you in the morning. That's all, and I am just out of here.